eradicating this terrorist group that they have now named the cartel terrorists and use it as a stepping stone to nationalize or take over their silver production. That seems kind of far-fetched to me. Is there anything in there for securing this stuff on behalf of, and they wouldn't be overt about it. And then you have the refineries that are, or they're talking the smelters that are being built, the refining capability. All of this stuff points to a price floor to incentivize domestic mining, a stockpile to protect national security.
Right.
I mean, ultimately, when you get into price manipulation and price capping, it never ends well. It distorts the free market, and in a globalized world where there is a decreasing element that is increasing in need and demand, establishing price floors or price ceilings seems to be a temporary at best solution. I don't think they could really easily do it for their natural resources. You know, it's one thing, and again, you know, I'm not an expert on what has transpired over the last 50 years in Venezuela, but when you have the Western oil companies built the infrastructure and had a deal in place until Maduro took over, you have a leg to stand on. When you talk about going into a country like Mexico because of the cartel and using it as an excuse to take over their silver mines or their silver production, it seems like a stretch.
It does seem like a stretch, especially considering that they're private companies functioning effectively in Mexico. A lot of multinational big mining companies have mines in Mexico, so it's a very different...
And the difference between a multinational mining company and a government, and you know, if you are a company like First Majestic who has mines in Mexico, obviously this is on your radar, you think about it, you start to bring in some serious security, and that raises the cost. It's going to hurt probably the bottom line on their share price. All of these things come into play, but I would have a very hard time believing that this administration would go in under the guise of eradicating this terrorist group that they have now named the cartel terrorists and use it as a stepping stone to nationalize or take over their silver production. That seems kind of far-fetched to me.
Yeah. Just putting it out there.
No, I mean, it's a fair point because you look at what they did, what his aspirations are in Greenland, which again is very different. The rhetoric with Canada and Venezuela, he's certainly doing things that are provocative, but that would, I think, be a little too far of a line to cross.
A new strategic initiative known as Project Vault is reshaping how the United States prepares for future resource conflicts. Modeled after the Strategic Petroleum Reserve, this program focuses on securing critical minerals essential for defense, technology, and industrial independence. Backed by roughly $12 billion in combined public and private funding, the project aims to acquire and store vital materials long before shortages emerge. While attention has focused on rare earth elements, silver has quietly entered the conversation. Its importance in electronics, renewable energy, and defense systems makes it a logical candidate for national stockpiling in an increasingly uncertain global environment today.
Economic security is national security, and a country does not have sovereignty if we don't have control of our critical minerals, don't have control of our steel production and our industrial base. And thanks to the work of everyone here through your leadership, this was a public-private partnership that only you could have assembled. And we are taking back our sovereignty, and we are going to have this Vault project, a strategic mineral reserve. And I can't tell you how innovative and exciting this is, and the level of security it is going to give us going forward is phenomenal.
I mean, what more do you need to hear? And if you ask yourself, who the hell has the power to make the CME group do this? You know, how much further do you have to look? Look, there's a fine line between conspiracy and reality. And I was reading on X today, and there was a commentator saying this isn't manipulation. This is an orderly drawdown of open interest, like it always does. How can anyone call what we just saw orderly? It's not orderly. It is anything. It's far from orderly. It's chaotic, and it's overt. And yes, the CME group always finds a way to draw down open interest into the delivery month so that it does not exceed what can be delivered. Once again, they did it, but at what cost? And anyone who would claim that this is orderly, I disagree with. This is flippant. This is right in your face, and what are you going to do about it kind of thing. And that's, to me, why you see lots of metal now leaving. In fact, way more than the February deliveries can explain. So, I don't know. I think that right there was very, very telling on just how plausible it would be that the gold and silver that we've seen come in since a year ago, November, in massive amounts that is being delivered to COMEX. Some doesn't leave, a lot doesn't leave, but now we see some leaving and maybe a lot leaving. So that to me would easily be one of the top choices. In fact, probably is my top choice as to who is behind this. Maybe someday we'll figure it out, but they're telling you that it's vital to national security. What more do you need to know?
And as we know, vital for defense, and vital for AI, and vital for the economy, and
well, in
vital
that
for electrification.
$1.5 trillion defense bill, is there anything in there for getting minerals critically? I don't know. I mean, is there anything in there for securing this stuff on behalf of, and they wouldn't be overt about it. And then you have the refineries that are, or they're talking the smelters that are being built, the refining capability. All of this stuff points to a price floor to incentivize domestic mining, a stockpile to protect national security,
Right.
refining and smelting to be able to produce it yourself. It's all pointing to gold and silver being far more important than the dollars that they're valued by are telling us.
Over the past year, unusually large quantities of silver, sometimes exceeding 50 million ounces monthly, have quietly exited major exchanges. These movements have raised questions among analysts about the true buyers behind such massive transfers. While corporations like Tesla or Samsung require silver for manufacturing, the scale suggests potential government involvement. Strategic stockpiling would align with national security goals, especially as modern defense systems, artificial intelligence, and energy infrastructure rely heavily on this metal. Governments often operate discreetly when securing strategic assets, meaning the full extent of these acquisitions may remain undisclosed until much later in the future.
Why not? I mean, and it would have to in many respects, because silver is found in nature in a form called epithermal, very near the surface. The big deposits were found long ago. Only about 20% of the silver that was mined last year came from companies like First Majestic looking for silver. Most of it was byproduct mining of copper, lead, and zinc, companies that don't have incentives to look for silver. So yeah, the cost, I don't know what the all-in sustaining cost would be, but I have to venture it's much, much higher than what we see right now, or that stuff would have been mined already. So yes, it would be to incentivize the domestic industry of mining for things like silver. I mean, ultimately, when you get into price manipulation and price capping, it never ends well. It distorts the free market. And in a globalized world where there is a decreasing element that is increasing in need and demand, establishing price floors or price ceilings seems to be a temporary at best solution.
Governments have historically influenced commodity markets to secure long-term supply stability. One proposed tool is a price floor, guaranteeing miners a minimum price to encourage domestic production. This would strengthen national resilience by reducing dependence on foreign suppliers. However, intervention carries risks. Artificially supporting prices can distort market signals and lead to unintended consequences, including oversupply or reduced investment efficiency. Silver presents a unique challenge because most production comes as a byproduct of mining other metals. Without direct incentives, expanding supply is difficult. This reality increases the likelihood of future policy actions designed to stabilize and protect silver availability.
It's an interesting thought experiment. I think we're a long ways away from that. And, you know, you're dealing with two assets that have never been allowed to find real price discovery. And
but is the supply there? I mean, sure, we've got
we don't
robots.
know that. I mean, yes, there's conjecture that could there be, you know, silver and gold on asteroids? Could it be in the bottom of the ocean? Sure. And I think a bigger issue with AI and robotics is what it does to the economy and to people's standard of living's massive efficiency at the expense of millions of jobs. There's another example of how AI and robotics will completely upset the apple cart even in the mining industry. I don't think that it is simple as having a robot dig 24/7 for gold and silver. It's not that simple, but sure, it might add a little bit. But like to the silver point, we've had a 200+ million ounce shortfall between supply and demand for now going on 6 years. So that robot should start digging right now to help just get to where we need them to be in terms of supply demand.
Plus, that robot is going to require a lot of silver to be built in the first place.
I think it's too much. it allows you to think, but I think it's too simplistic in and of itself. And advanced imagery would have exploited some of this stuff long time ago. And yes, there are some places that are rather inhospitable to humans trying to, extricate this stuff from very, very difficult places to do so, that robotics may come in handy, but I don't think it's as easy as he's painting the picture to be. Interesting the way he frames it, something to think about, but I wouldn't be concerned that this all of a sudden would just unlock massive amounts of supply hidden away in difficult places to reach.
Some investors believe artificial intelligence and robotics could unlock vast new mineral supplies, potentially lowering precious metal prices. Autonomous machines could explore remote regions, deep oceans, or hazardous environments where humans cannot operate safely. However, mining remains complex and capital-intensive. Discovering deposits is only the first step. Extraction, refining, and infrastructure development take years. Ironically, advanced robotics themselves require silver for electrical conductivity and performance. This creates a feedback loop where new technology increases demand, even as it attempts to increase supply. As global consumption continues rising, technological advances may support production but are unlikely to eliminate scarcity completely.
Michael Hartnett, the lead analyst for Bank of America, 25% of your assets in gold. The chief investment officer of Morgan Stanley, 20%. Jeffrey Gundlach, the bond king, 25% isn't overweight. And billionaires like this and Ray Dalio, who are all framing gold and silver as integral to portfolios, to see the obvious that weaponization of the Treasury and of the dollar and the SWIFT and mismanagement of our fiscal responsibilities to the world and maintaining value of our dollar and of our Treasury. These things have all been classic in terms of why the hell would anyone want to hold our Treasuries and or sell us their goods for a depreciating asset like this. So yeah, I think we've seen a push towards many central banks favoring gold instead of U.S. Treasuries, slowly, not to cut off their nose to spite their face, but it is a growing trend that we've talked about forever in the BRICS nations, and it's expanding. And quite frankly, I think it's silly to look. The reporting requirements by the governments to the IMF as to how much gold they're bringing in is voluntary. I would think that many of the central banks, even those that claim to be our allies, are doing the same thing, realizing the fragility of this system that is not only well past its prime in terms of its age, but what we are doing fiscally, our monetary choices, and then the weaponization and the sanctions that are pretending to be tariffs are wearing thin on much of the global wealth. And why hold treasuries when you can hold gold, which has massively outperformed the treasury market for 25 years, but has no counterparty risk, and that's what it boils down to, lack of trust.
A growing number of central banks are increasing their gold reserves while reducing reliance on government bonds. This shift reflects concerns about inflation, currency stability, and geopolitical tensions. Unlike paper assets, gold carries no counterparty risk, making it attractive during uncertain times. Major financial institutions have begun forecasting significantly higher gold prices in the coming years. This trend signals a broader loss of confidence in traditional reserve systems. As trust becomes a defining factor in global finance, precious metals are regaining their historical role as foundational stores of value and long-term financial security for nations worldwide today.
Yeah, and JP Morgan just came out and said it could go as high as over $9,000 if indeed it were to stand behind on a greater degree to the US dollar exposure. But 63, 66, any of these, I mean, you had Jefferies come out and say a few months ago 7,000. I think it's totally plausible. When you see these banks coming out and making these admissions, not only do I think it is becoming more reality, and again, these banks have undershot where the price has gone continuously and continue to update their statements. This is the first time I've seen one this far up. I think it's also a very big green light for the mining shares. If indeed they see gold going this high, what does it say for the mining companies? Which again, if you're using it from the standpoint of you now have governments coming in to stand behind the production, the refining, the stockpiling. This is big for the entire industry, and maybe it's finally an admission by these people that this is an important part of any portfolio, and even at the highest level, they're telling their clients, hey, you know, you got plenty of room left in growth on gold and silver, and you should own some.
Mm-hmm.
Recent months have seen extraordinary demand for physical precious metals, placing strain on supply chains and refining capacity. Rising prices triggered higher margin requirements, creating liquidity challenges across the industry. Refineries, logistics providers, and storage facilities experienced disruptions as demand accelerated beyond expectations. Despite these obstacles, investor interest remains strong, driven by economic uncertainty and strategic positioning. This imbalance between growing demand and constrained supply suggests continued volatility ahead. As governments, institutions, and individuals compete for limited resources, precious metals are increasingly viewed not only as investments but as essential strategic assets for the future global economic order.
I'm seeing a market that has experienced tremendous demand and tremendous growth, but has run into some severe problems with liquidity due to the increase in margin requirements on COMEX, which has spilled down into this industry and log jammed everything, gummed it up. And I think if I had to guess, they won't do that again. If I had to guess, they got some severe flack about what this did to the economy. These refiners don't just handle gold and silver, they have integral parts in the economy, and the refiners have been margin called across the board and shut down because the price had been going up so fast, along with the increase in margin, that it became impractical and too expensive to continue refining metal or paying for it and refining it when it takes so long to produce it. It gummed everything up. It gummed everything up all the way from the depositories, the IRA custodians, the logistics. It's something I've never seen before. But I will tell you that this all coincided with massively increasing demand through January. As strong of demand as I've ever seen in my career. We did as much business in the month of January as we did in a third of all of last year, which is one of our biggest years. And then, much like the speculation that it increased on COMEX, what they did to bring down this open interest was to massively increase the cost of owning that leverage. And the unintended consequence was this industry that is experiencing some significant liquidity issues that seem to be starting to unwind. But I know that's not what you asked. The moral of the story is that this tremendous volume that we saw on COMEX, or demand that had pushed the prices higher too, we've also seen in the retail industry that we haven't seen for quite some time in terms of concentrated demand, where January was as crazy as anything I've ever seen. I would think that's emblematic of people waking up. Now, the effect of smashing it to these people, knocking it down, I think knocked the wind out of a lot of people who are like, wow, how can that happen? It's a temporary setback, and here we are climbing right back up again. I think that we will see very, very, very strong demand into an industry that has experienced difficult supply acquisition because of all of these fundamentals. So it's been a very stressful couple of months with massive demand and supply and liquidity problems throughout the entire ecosystem. I guess is the best way I can explain it.